for their car payment or helping with food and board or whatever they need. So those are some things that we don't see. So you definitely know what your net is. But I also want to tell you that if you do buy and you look at what you qualify for versus being able to afford, this doesn't have to be your forever home. And that's the thing. Like, I think we're caught up in that this is my one and done and I'm going to get what I need. If you are a single person and it's just you and maybe 1 or 2 kids, why do you need a 5-bedroom, 3-bath house? You know what I mean? Like, realistically, it's cool to have or to say that you have it. But if that is stopping you from purchasing a home, housing prices aren't going down. They haven't gone down, and it's not getting cheaper. So you just want to make sure you make a smart decision.
All right, hey, this is Natasha Bazile with soldbynat.com, associate broker, home selling, and relocation specialist with Virtual Properties Realty in Georgia. And today I have a very special guest. This is Mr. Kevin Jefferson, also known as the People's Lender. Welcome, Kevin.
Hey, Tasha, it's always good to be around you.
Yes, you see, he called me Tasha because we go back. We go back. We have done videos. I know I had locks and shaved sides. It was a while ago.
Was it right before the pandemic?
2019? Okay, I'm gonna look it up and I'm gonna put it in here, but yes. But today, we are getting together. It was long overdue, but shout out to Lynette Williams because she actually left a comment that it would be helpful to see a video with a lender. We're just gonna talk and touch on some things with today's market, with what he's seeing on the lending side. But before we do that, let me give a shout out to the beautiful Meraki Studios, which is where we are recording at today. We are in their conference room, so definitely check them out. They are the newest content space in Gwinnett County. They're actually located in Norcross. They have a podcast set. They have actually 8 sets for you to take your photos, your videos, shoot whatever content you want. And then they also have this conference room. Oh, and let me not forget the glam room. So yes, definitely go ahead and check them out and support. So Kevin, how's it going?
It's going. Yeah, it's going.
Listen, it's going. So at the time of this recording, it is June 2024. And let me just kick it off here. I know you get this question because I get this question. Should I wait to buy? Are interest rates going to come down? And we don't have a crystal ball, right? So I watched one of your shorts and you said like last year, the Fed said that there would be rate cuts this year. We have not seen it yet, right? And we're in second quarter.
No, we hadn't seen it. And ironically, I think over the weekend I saw where they said don't expect one this month either. If you're going to have rate cuts, you probably would have had at least one within the first 2 quarters. Well, this is the end of the second quarter. Mm-hmm. So, waiting and trying to time the market is hard and nobody can do it. I like to study history of mortgages and real estate. There's never been a time where prices dropped and rates dropped at the same time. It just never happened. Timing the market is not the right thing to do. And to answer your question, I get people asking all the time, when's the best time to buy? When you can afford it. So qualifications and eligibility and affordability are 2 different things. They're definitely 2 different things because we look at gross income, but you know what your net is. If you're a single mom, single man, single dad, and let's say you make $100,000 a year, that means all of your retirement, your taxes, and insurance comes out of your own pay, and you're not splitting it with anybody or have additional funds where, okay, we can cover that gap because I have someone else. You take that into consideration to see if you have the ability to. So that definitely plays a part. I mean, we have people who make good money, but they also are helping their parents. And that's stuff that we don't see. Or they have a kid in college that they're paying, for their car payment or helping with food and board or whatever they need. So those are some things that we don't see. So you definitely know what your net is. But I also want to tell you that if you do buy and you look at what you qualify for versus being able to afford, this doesn't have to be your forever home. And that's the thing. Like, I think we're caught up in that this is my one and done and I'm going to get what I need. If you are a single person and it's just you and maybe 1 or 2 kids, why do you need a 5-bedroom, 3-bath house? You know what I mean? Like, realistically, it's cool to have or to say that you have it. But if that is stopping you from purchasing a home, housing prices aren't going down. They haven't gone down, and it's not getting cheaper. So you just want to make sure you make a smart decision. And you know what? It's okay if you don't qualify, right? If you don't qualify, you feel like you can't afford it right now, get with a lender and figure out what it's going to take for you to afford it. Do I need to pay down some debt? Do I need to pick up another job? Meaning a second job or a more higher paying job? You'll be amazed at the number of people that I see that have qualifications to get better jobs and they just don't. So like for me, I just have a simple conversation. You've been in Walmart for 10 years. You could go to Publix and make double just because of your experience. Why wouldn't you make that transition? It's from grocery store to grocery store, right? But some people are just afraid to change. But sometimes you have to make changes to get where you need to go.
Because the Fed say it, it's not a guarantee it's going to happen. Or is it?
No, it's no guarantee that it'll happen. Because like maybe a month before they announced that they were going to cut it 3 times, they had said they thought 6. And then when he finally, Jerome Powell, who's the head of the Federal Reserve, had his quarterly or monthly meeting, he said they were going to cut it 3 times in 2024. But inflation and jobs have to come down in order for that to happen. Ironically, Jerome Powell is the head of the Federal Reserve, and he is not an economist. He is an attorney. So it's not like we have an economist at the helm, studying the economy. He's an attorney.
All right, so from there, I am concerned about the future of home ownership. I don't see that it's getting easier to get into the market. Without going down a rabbit hole, I just feel like the optics out there is pushing fear and people not doing what they need to do or trying to time the market, and they're waiting, and they're going to continue to wait and continue to wait, and it's not getting easier to get into a home. And the biggest reason why I'm concerned about that is because there is wealth in home ownership. Just home ownership, you owning the home. I'm not even talking about investing. I'm just talking about you owning a home. And like you say, if you don't need that 5-bedroom home, don't go after that, but get in something. Start building equity so that when the time comes and you're like, all right, I'm ready for that bigger home, you can sell that starter home and take out that equity and then go to the next one. I'm concerned because I'm seeing all these new construction communities go up that are solely for rent. And I feel like that's a rent trap right there, because you get in there, you get comfortable, and you never start saving and doing what you need to do to get your own home.
Back in early 2000s when I was in real estate, prior to 2008, I was having the same thoughts. And I didn't have kids at the time. And I was like, man, how are my kids going to be able to afford a house? We saw corrections in the market, things came down, and then they shot back up, right? So now my conversation is, how are my kids even going to be able to afford a house? I don't know if there's a way to have affordable housing. Like you literally, I don't know. Like it's affordable housing crisis, but affordable is depending on where you are. Affordability in Atlanta is different than Idaho, which is different in Delaware. Like I was telling my wife, a $250,000 house, if you can find one in Metro Atlanta, payment is probably about $200 higher than a $250,000 house payment in Delaware. And that's because of the taxes. Same thing. If you look at a $250,000 house in the Houston, Texas area, it's probably $200 a month higher than Atlanta because of the taxes. I do want to talk about this, Tasha. People are focused on 2 things, right? They're focused on interest rates, and for some reason, mortgage insurance is a dirty word, right? I had a consultation with a young lady, and she said, hey, how do I get rid of mortgage insurance? And I point, when I do a consultation, we're via Zoom. I pull up the Zoom screen so you can see what I'm talking about, so it makes more sense to you. And I pointed to her, I said, you see this little number right here? I said, that's your mortgage insurance. She said, that's the smallest payment on there. I said, yeah, so you want to bring 20% of $250,000 to save $125 a month. So that shouldn't be your focus, right? Okay. I don't think figuring how to get rid of mortgage insurance should be your focus. I know Uncle Dave Ramsey says that you shouldn't have it, but you may not have to have it for a long period of time. Way the market's going 2-3 years, you just request to have it removed if you go conventional. If it's FHA or an FHA loan, you can refinance and get out of it. But we have 2 bigger problems. Property taxes constantly rising. I know I'm in Gwinnett, and I think our property taxes have gone up every year for maybe the last 4 years. consistently, right? And then you got homeowners insurance. Homeowners insurance is steadily increasing, and those two things are something you can't control. Once taxes is up, they don't go down. The taxes don't go down. And homeowners insurance, yeah, you can shop around, but the likelihood of it going down is tough because all of a sudden we're having a ton of storms, floods, and tornadoes in places, and earthquakes that you haven't had them before. And then you kind of goes back to the pandemic, right? You had a ton of people who did not do home inspections. And now they're having problems with their homes and they're filing claims. And if the claim is paid out, the homeowner's insurance company has to recoup that money somewhere, along with people stealing cars, car accidents. So all of those things play into your homeowner's insurance. So even if interest rates go down, even if housing prices potentially go down, one or the other, you still have to deal with property taxes going up and homeowners insurance going up. And everybody wants to be in a good school district. So the better the school district, the higher the property taxes are going to be.
So on that note, I've been seeing things pop up online, little videos, comments with my mortgage increased by such and such. And I had a fixed rate mortgage. Yes, because those are the things, the property tax and the homeowner's insurance. Even though you have a fixed rate mortgage, when those things go up, your mortgage will increase and adjust as well. I still believe in homeownership, and I still think it's the vehicle and the route to go buy when you're ready. But like two things you said, like, how are your kids? You thought in 2008, how are your kids gonna be able to buy a home? I've already accepted, like, I'm going to help my kids buy a home. I've already accepted it because it's just a different time. And I pray that I'm able to do that to help them with the money they need to, start their home. That's one. And then two, I guess this kind of goes back to time in the market because my husband and I bought in 2016. I thought we bought late. And I was like, darn, but okay, we still did it. And now in 2024, I'm like, oh, thank God. We bought what we did. So you trying to time the market and, I waited too long, let me just not do it. No, the best time to buy real estate is when? Is now.
Right. Yeah, I've got a guy I'm working with back in 2019, was before the pandemic. He was looking to purchase, didn't want to spend over X amount of dollars. We kind of went through it a couple times and then he kind of, fell off and fell back. He didn't buy during the market when rates were 3%, which probably would have made more sense at that time. He reached out to me, he got pre-approved again. And, he was approved for more. He's had raises, doesn't have a lot of debt, doesn't want to be house poor, which I totally understand. Don't get me wrong. I'm not insensitive to what you want to do and live life outside of your house. However, he came back to me and he said, hey, Kevin, I'm still looking at the same houses I was looking at 5 years ago. It's just $70,000, $80,000 more. We take for granted that the market's going to crash, and you really don't want to see that. You don't want to see a market crash because you can get a less expensive house. What if your husband is a contractor, or your wife is an architect, or your husband and wife are a builder if you're builders, or if somebody you work for or in your family that helps out works at Home Depot or Lowe's. It's all of those things
connected in some way.
The market crash, okay, they're not in the housing industry. They lose their job, that's less people going to Walmart, Publix, and Kroger to get food. Like, all of those things are going to be affected. Less people potentially buying cars. You see what I'm saying? Like, everything is, connected. Okay, you no longer working overtime because your job can't offer the overtime which you need to help qualify or pay more bills. So there's so many, nuances to people losing their job and the market crashing. What I can say is this: tighten up your bootstraps and make sure that you're cutting out whatever cost that is unnecessary. Example, I'm gonna talk about me. When the market shifted from 3% interest rates to 5% interest rates, and people was like, I don't wanna buy a house with 5% interest rates, I had to tighten my belt. First thing we did was, let's look at these streaming apps. What can we cut? What can we do? What do we need? What don't we need? We went through and I think we cut between cable and apps, I think we cut about $200. We cut back on, going out, just like little things, majority of our money, and I say I'm talking about everybody, goes to food. Like I was in and I know this is off topic, Sasha.
No.
Came out in the grocery store There's a lady next to me in a truck, and I looked down and I said, we did all this grocery shopping just to see where we're going to eat at. And she was like, you're right, because my husband was ordering pizza. So like those little things, and they add up. Look, I was at a meeting, they had food. One of my sons has allergies, so he couldn't have any food that was there. I had to ask, 21 questions, like 50 cents. I had never done DoorDash.
Like it opened the door.
Oh my God.
Yeah, that's a whole other thing.
Like, you want me to tip you, the service fee, the delivery fee. So when it came out to the end, the fees that I was charged cost just as much as the food that I had gotten.
So you pay double.
Paying double.
But people are doing that like clockwork.
Right.
Like it has just become the norm.
It has.
So it's just those additional fees and things where people can cut back to get what they want. I believe when people really want something, you will find a way to get it and to do it. So it's possible.
Let me ask you a question.
Okay.
The client has come to me or whatever lender, and they come to you and say, hey, Natasha, we're pre-approved for X amount of dollars. You're out looking. They give you, I know you do a buyer's consultation. How many houses do you show clients?
There's no set number in my mind that I say you're only going to see such and such, but we definitely go down. Like, we just not tour guiding this. We just not out here looking to look. So there is no set number, but I definitely know when it's like, okay, during our home buyer's consultation, you said you wanted this, this, and this. You found this, this, and this, and it's not what you want. So now we need to have another conversation. So I feel like a lot goes into that home buyer's consultation and just making sure that not only are we on the same page, the buyer's realistic, I'm understanding the expectations. So there's no set number that I have in my mind, but I remember when I first got licensed, I heard agents in the office talking about how she showed this client 40-something properties for rent. For rent. She was not even living there. I was like, we're not doing that. There is no magic number. And thankfully, the majority of my clients are just like, I have some clients, I love them. They're like, listen, I'm not trying to see a ton of houses. Like, because they just don't even want to have the time, the looking, they don't want to do that. Why do you ask that?
I asked that for a reason.
Okay.
So you said that you show them houses and then all of a sudden they've told you, hey, we want A, B, C, and D. You've seen A, B, C, D, and E. Mm-hmm. But they just happen to see something else they wanted. What are some drawbacks for that person, or what are some things buyers are saying to you of why they're not putting an offering on the house that they say they wanted?
Granted, it doesn't happen often, so I'm trying to jog my memory. Normally, the people that I get, because they connect with me via YouTube, social media, they're savvier, so they kind of know what they want. So I'm trying to think back to some of the reasons. I know there was some clients I had to let go. They were not on the same page, and we went through house 1. They terminated because of the inspection. Got to house 2, new construction, and we're about to schedule new construction, and one of the parties was like, I think this is moving too fast. So they said, we're gonna break until whatever month. Started back the next month. She sent me houses like, can you get me in to see these houses? Schedule the houses. The other party was like, yeah, those really weren't our favorite. So I was like, okay, y'all not on the same page and we're not doing this again. So I had to let them go. If that happens, it just doesn't feel like either party's on the same page or they know exactly what they want or they're looking for. I'm sorry, I don't have a better answer. But
no, that's fine. I'm asking because when I talk to agents, some feedback that they says the buyers don't really know what they want. They have in their mind what they want in the beginning when you go through the consultation, but when you show it to them, the apprehensiveness of pulling the trigger. Sometimes it's sticker shock, but then most agents that I know or work with will say, hey Kevin, on 123 Main Street, such and such likes this house, can you run some numbers?
Okay.
So then I run the numbers based off of that house, and then the payment is where their concern is, which is crazy because we go over payment in the consultation in your price range. So I always approve a person for as much as they can get.
Okay.
I tell them, you don't have to spend $500,000, but that's what you're qualified for. Anything below that, you're welcome to spend. You just can't go above $500 unless you have the extra money. I think that's why I went with the approach of doing a consultation so they can see the screen.
That's good.
So because then $500,000, oh my goodness, yes, we qualify. I said, that's great, but I want you to see what this payment looks like.
Okay, I like that.
And then it's like, oh, I didn't know that. We was trying to go $2,500. So then on my screen, I can show you, hey, this is what a $2,500 a month mortgage looks like. Well, I can't find anything like that. where did you come with the number of 2,500? Well, we paid 2,300 now. We say we can go up $200 more to stay within our budget. And then I'm like, so that's the thing. Like, you're welcome to spend where you need to be for $2,500 a month, but this is the price point you're going to be. And if it's in that price point, you're probably going to have high competition. So then that's kind of like the reality check that people have. Because who doesn't want, the big bad house, right? Buyers, agents, loan officers, we don't control the pricing of real estate. As it sells, it's going to increase. Like, that's something that we just don't control. That's the way it's done. The comparables are done that way. So you have to have a conversation with, what do I truly want to spend? What do I truly want my payment to be? Realistically, what can we really afford to buy? And even if it comes with having to tighten up on some things, I think it's more important to get into the house. And I let them have that conversation amongst themselves. Or, I give them the letter and they go shopping with the agent. I have a conversation with the agent, because sometimes in your mind, what you want to pay is going to be different when you see what you really want also. So sometimes I have clients who say, oh, we're not going over X amount of dollars. And then they see a house and it's like, hey, I know it's high. I know it's going to be higher based off what you told me, but we really like this. So you got to get out and see it as well. The biggest hindrance to people buying homes is themselves.
I firmly believe that.
It's themselves. I mean, I don't want to spend a bunch of money, but I know that if I wait 5 years from now, I'm going to probably pay double. So if you're listening and you're watching the video, I want you to take into serious consideration what houses, and maybe even go online and see what were houses back, and let's go back 2019 as opposed to now. Like, you can even pull up on Zillow in an area and it'll tell you what it sold for back when it last. So like, housing prices aren't going down. And if you really truly want home ownership, I think you can figure out a way. And I've seen generations, like mother and kids getting together to buy.
To make it happen.
And I think that's what it's going to take. I think it's going to take, your kids are older than mine. Right? So I'm gonna have to do the same thing.
Yeah,
I'm gonna have to do the same thing unless one of them a ball player.
Yes, Lord, please. But like, what's the alternative? Because somebody might be saying, well, no, this sounds like too much. It's too much money. What's the alternative? Because essentially you're paying somebody's mortgage. You're paying a mortgage. It's just not yours. So the rent that you're paying is going to your landlord. So you're paying the money. It might as well be put into your own household, your generational wealth, your whatever. Do it for you. So I think that's crucial there. The other thing, when Kevin was talking about him showing the numbers, you want a $500,000 house, but you want a $2,500 payment. There used to be a time where I used to just ask people, like, how much home are you looking to buy? Now I'll still ask you that, but what do you want your monthly payment to be? Because that tells me, where are you realistic here? And not even, no fault to you, you might just not know. So that's what we have to have, those talks for you to get an understanding of, okay, if you want that $500,000 house, this is what payments are looking like now. And some people are going to be like, okay, well, we'll come up in payment because they can. And if they can't, prime example, just had a closing last week. And the wife joked about it. She was like, remember when I came to you? I was like, Fisher. I want a Fisher home. I want a Fisher. They ended up buying a house that was listed $300,000 because they knew what payment they wanted to be at. So, but kudos to them. She wasn't willing to say, well, what do we have to do to get these $500,000+ homes? Like, she just knew that wasn't for them in this season. So,
right.
You just have to make, an adjustment. You said that you feel like the biggest hindrance to people buying homes is themselves. And I was like, yeah, I firmly agree. That's because, like what you said, like, if you need to change jobs, if you need to get another job, ultimately comes down to us. Yeah, the market is going to do what the market does. Interest rates, property taxes, all of that stuff. But what can you do? What are you in control of? So, question for you. Right. Everybody's an expert. Everybody's putting out content. Let that just be a nugget, like where you're getting the information from. Example, there's content out there that's like, buy land or buy a house with FHA under such and such. They just put out the information. I think I reached out to you. You were like, yeah, it's in it can be done. It's in the guideline, but it's also like, it's extremely rare that you find something like that because of the purchase price. Does this ring a bell at all? Or do you hear things like that?
Someone called me and wanted to purchase a home under sovereign rights. There's a big thing going around said the sovereign rights are saying that, hey, you don't have to pay for your debt. So I just asked the person, I was like, if that is even true, you want to finance a home for hundreds of thousands of dollars knowing that you don't want to pay it. Doesn't make financial sense to us as lenders or anybody to lend you money. Again, you got to vet who you're dealing with. Assumable mortgages is a big thing.
Okay.
And yes, you can get a rate for 3%, 4%, right? Below market right now. If the person paid $250 for the house and the house is now worth $450, you take over their time frame that's left in the house payment, you take over their interest rate, and you take over what's owed on that house.
Okay.
You have to have the additional funds to pay them what they want for the remaining balance.
Oh, nobody talks about that.
Nope, they don't talk about it. If the person needs $200,000 for the house on top of the $250 they owe, you have to come up with that.
Okay, so what you're saying is they bought this house for $250. The house is now worth $400.
Yep.
Let's just use even number. They bought the house for $200. The house is now worth $400,000.
Right.
So they're taking over the terms. They're taking over the interest rate.
They take the
payment, but the buyer has to come up with the $200,000 difference between the $200 and the $400.
Yep. You don't go to a traditional lender to get the assumable mortgage. You have to assume it from the current mortgage company. People haven't done assumable mortgages in years, and all companies don't have a process in place because they haven't done them in years. And it could take anywhere up to 6 months for them to tell you no. Because think about it. Mortgage servicing companies, when they give you the mortgage, make their money after the mortgage closes on the interest that is paid on the house. So if they have a house that is owed on $250 on it, and the interest rate is 3%, they stand to make more money financing that house to you for 6.5%, 7% interest.
So that's the route that they
That's
really
the
want
route
you
that
to
they
go.
really want you to go. They'll definitely finance it at that point, but there's no guarantee that you can assume that mortgage at the 3%. I believe in 2023, there was 10,000 homes that had mortgages that were assumed, which sounds like a lot, but based off the millions of homes that were sold last year and mortgages done, it's not a lot. It's a drop in the bucket.
Okay. Another thing that's out there is like when you work with the lender, shop the rates or shop the lenders. On the lender side, like, yes, I tell buyers, like, if you want to compare, go ahead and compare, but it's not going to differ tremendously. Like, it's not like one lender is going to be like, hey, I'm going to give you 6%, and the other one say, I'm going to give you 3%. Right? Or correct me if I'm wrong.
No, it's not. So it's not going to be a significant difference in what the actual interest rate is. The significant difference is going to be origination points if a company charges origination points, or it's going to be if you have something called discount points. Mm-hmm. So let's say Tasha has a buyer that she sends to me and she sends to ABC Mortgage. And our company's discount points are, let's say it's 1%. 1% of $250,000 is a $2,500, discount point. Well, what if this company is charging 2.5? That's about $7,000, $6,500, $7,000. There's a huge difference in your closing costs. That goes towards your closing costs. But again, depending on your circumstances, you get what you pay for. Nobody wants to be the cheapest. That's why in the last, I think, 4 to 6 quarters, a lot of mortgage companies have lost money because they've been the cheapest. Mm-hmm. And you can go online and find somebody that's going to do your loan for pennies on a dollar or a loss, but you get what you pay for sometimes too.
Also to that point where I'm like, you have to use a reputable lender. It might sound good, but when something comes up and they are throwing their hands in the air, they don't know what to do, there's nothing that they can do now, this is jeopardizing the whole process. So you also want somebody that you can reach, somebody that you can talk to, somebody's going to answer your questions. It's not just about the cheapest or being the cheapest, which that relates to real estate agents because come soon, it's changing how real estate agents' commissions are going to show in the MLS, or how it's disclosed, or how much the seller is willing to contribute. And check out Kevin's content, because he has some great shorts about that, just mentioning like little things. You might say, well, I'm gonna go to the agent that's not going to charge me anything extra out of pocket. They're just going to take whatever the seller is giving them, if the seller is giving them anything. Good luck going that route, because I would not be in this business on a dice roll. Like, I might get paid, I might not. I'm not doing that. But you're also paying for expertise, experience, knowledge. So the agent that you decide to work with, you want to work with somebody that's reputable as well. So just keep that in mind. I have a quote in one of my consultations, I think it's my seller consultation. It says, if you think working with a professional is expensive, wait until you work with an amateur. Okay, the other thing I was going to ask about, hey, I'm a first-time home buyer, and I know we've mentioned this in other videos, so we're not going to spend time here. I'm a first-time home buyer. I always say there is no such thing as a first-time home buyer loan, or just something structured just because you're buying a home for the first time that you're about to get this money. What they're referring to is down payment assistance programs. Yeah, are you seeing an increase? Because 2020, that went out the window. Like, it was so competitive. Like, down payment assistance, getting your loan or your offer accepted, going down payment assistance, was, with the amount of competition that was out there, sellers didn't have to go that route. Are you seeing an increase?
Yeah, I think everybody that comes to me wants down payment assistance.
Okay.
Even if they've recently sold a home.
They still trying to get down payment assistance.
Yeah.
What's your take on that? Because down payment assistance, it's not free, but maybe I'm wrong. Go ahead.
It's not. So, there are programs that offer down payment assistance, even if you currently own a home or recently sold a home, right? But there's a cost to it.
Really?
Yeah.
Okay, I was trying to get, if you want the details, you have to contact us for the info. Okay, all right.
There's a trade-off. You either are going to have to take a higher interest rate because that's what they're offering you, or there's a specific period of time you have to stay in the house to alleviate it making sense for them. Something that happened during the pandemic, a lot of down payment assistance programs changed their requirements, because what was happening was people were saying they were relocating, they could work remotely, and then they never moved into the house, and utilizing down payment assistance programs to turn into an investment property, Airbnb, short-term rental, yada, yada, yada. Mm-hmm. So some of these programs, like, hey, that's cool, you want to relocate to Georgia, you want to relocate to Florida, but you need to be a resident here for at least 6 months to 12 months, so we know that you're physically here or physically going to use this program. Mm-hmm. So that was some changes. Most programs want you to stay 3 years, 5 years, even up to 10 years. Well, how do they know if I'm gone? They're going to send a letter. If they send you the letter and it gets forwarded to a different address, they know you no longer live in that property, right?
Okay.
They have something called testers. Even with FHA, where there's only a 12-month requirement, sometimes they send people out to the address to see if you actually still live there. So, there's nothing wrong with down payment assistance. Nothing at all, right? But you got to pay to play. And I always tell people, you're utilizing someone else's money to save you some, so there's a cost to it. Like I said, there are some programs that don't have higher than normal rates. They usually take market rates, but that's typically for low to moderate income. And even though you would think that you have a low income, what that is compared to your area and what you think it is are two different things. So, there are programs for down payment assistance. There are some that have a requirement that says first-time home buyers only. But that doesn't mean you automatically qualify because you're a first-time home buyer.
There's still criteria.
That you have to meet in order to qualify.
Okay. All right. And just shout out to Kevin there, just so that he can help you regardless of what state you're in. Like, are you in all states, or what states are you?
All 50 states and District of Columbia, DC.
And you guys know I'm in Georgia, but if you need an agent in another area, I can assist you with that as well. Okay, all right. With the down payment assistance, my only thing is, if it's a competitive market and you're going through a company where I need to let them know in advance, that's kind of a disadvantage if we're in a multiple offer situation. On the back end, are there programs where they have to get stuff signed up front?
There are some municipality or local programs in your area that require you go through their housing counselor to get documentation signed. You have to take typically now it's online course to meet that need. And that's cool. That's good, because ironically, taking one of those courses, even if you did not, let's say you didn't qualify the down payment assistance program and didn't use it, and you took one of those 8-hour courses, that could potentially help you get approved.
Really?
Because the underwriter sees that you've had education on home ownership.
That's good.
And we just provide that certificate, right? But for the most part, you want to be as educated as you can on the process. You know, if you're watching this video, you're educating yourself on the home ownership process. You know, there's lenders that know more than me. There's lenders that know less than me, right? But you just want to vet the person. If it sounds too good to be true, it probably is. But what I do want to tell you is see what's available to you, and you still want to make sure you have funds available. Because Tasha is right. You know, if it's a competitive market and there's extra time needed for the down payment assistance program, that may not get your offer accepted. And something I want to touch on, talking about down payment assistance. The goal is to come to closing with the least amount of funds possible. For everybody, right? For all of us. But what you could run into is if you're using a down payment assistance program and you're getting a gift from a family member for a portion of your closing cost, and then you're asking the seller to pay for a portion of your closing costs, that could keep your loan from being eligible.
Because you need to be coming with some money.
Because they want you to try to have some money. Typically, the rule of thumb of what I've seen is the better the score, the more they allow in terms of gifts or down payment assistance or a combination of the three. The less money you have in reserves and a lower credit score, the harder it's going to be to qualify for using all three. You know, I have seen people qualify with all three, and that's great, but you have to have good credit. You know, and when I say good credit, or a history of having 20 years old and you got a 700 credit score and you're trying to go conventional, that may not work because you don't have a long enough credit history. But you could flip the FHA and it could work. And it could not work with FHA because you don't have a credit history. You know, try to have money available, resources, 401k. If you're looking to buy a house in the next 12 months and your job offers a 401k match, I would jump on it, because you can utilize those as reserves. So like sometimes if you got, let's say you got a 640 credit score and your lender says, hey, you need 3 months reserves, then if you can provide that in a 401k, then that helps you get qualified. So there's a ton of nuances and different things that people don't know. It's not as simple as, oh, I got a good credit score and I make X amount of dollars. What do you look like on paper? And always ask yourself this: would you lend yourself money? Like realistically, I have a conversation with people and it's a running joke, but I'm serious with it. If I asked you for $200, what are you gonna ask me? Well, I wanna know when I'm getting it back, how I'm getting it back, what you need it for. That's the same thing we're asking you, except we're talking about $200,000, $400,000. You know, the same questions that we're asking, you're gonna ask us. It's just because it's not your money, you don't feel the same way and you're trying to get the money.
That's good. So what you said, like, even if you're using down payment assistance, have money saved. And I'll tell people that, like, yeah, definitely do that, because great if you don't have to use it, but it's there. But in order for me to help get your offer accepted, depending on, you know, the situation, how many other offers, that kind of thing, it helps if I can tell them, hey, my buyers are going down payment assistance. However, they do have the money in reserves in case they need to use it, and that can be a help as well. So I just gave you that free nugget, agents. I just gave it. The biggest thing I want to wrap this around to is what you're saying is, like, if you are even interested in buying a home, whether now, near future, find out what you need to do and get with a reputable agent and reputable lender so that he can give you the game plan, because there is no one size fits all. Well, my cousin bought a home and they got approved for such and such. You don't know their picture. You have to get with the lender and come up with a game plan. I'm very big on game plans. And that's why you need to speak with the lender. So I know, okay, what were you approved for? What's the amount? So that once you have that lender approval, I know I can get you out there and I can get you secured on the house. But what we don't want to happen is you get with a lender and I get you in the contract and the lender's like, oh yeah, we're not gonna be able to make this work. Oh no, sir. Nobody wants to waste time. Do you see the price of gas?
No, God, please, no.
Nobody wants to waste time. No. And nobody, I don't want you getting your hopes up thinking you're about to get this, and nobody wants that kind of, oh no, it's already the biggest purchase that you will be making in your life. You do not want that type of stress. So yes, I hope you guys got some great nuggets insight from this video, got your questions answered. If you didn't, drop them down below. My contact information and Kevin's contact information will be down in the description box, so definitely connect with us.
Just buy, look to buy, have confidence in yourself. Typically doesn't cost, and I say typically because now they're charging for credit reports.
I saw you short, but I'm not mad at that. Why I say I'm not mad at that is because you have to understand people out here shopping with everybody. These lenders are incurring costs to pull all these credit reports. It's gonna make people be serious when they're reaching out and really vet, okay, these are the top lenders that I'm considering, and go to them. It's gonna make people get serious. It's same on the agent side. Now you have to sign a buyer brokerage agreement. You have to be on the same page with your agent, which Georgia was ahead of the game. Anyway, in that area, I was already doing that. So it's no change for me, but to other people, I feel like it's gonna bring serious buyers to the table.
Yeah, I think so. I think the investment in buying a home is going to keep you honest. Meaning honest, okay, I went to this lender and they charged me, if it's a couple, probably $100 for my credit report. Okay, I went to the realtor and now they want a $500 retainer. That's going to keep you from looking around a lot more. Not saying that you shouldn't look around. Before you sign anything, you need to interview who you're working with.
Yeah, and it's going to stop that. I decided to use my cousin. It's gonna stop that.
Yeah, it's definitely gonna stop that. I went to an online lender or went to an open house and their lender was there and they gave me some cookies and milk.
And now I'm just gonna go use them because so listen, there's one thing I learned in real estate. It's gonna do this. The market does that. Changes are gonna come, but the overall goal and objective, I still believe there's wealth in real estate. And I feel like it's the one avenue that the average person, I say average, but you're still great. You're still great. But it's the one vehicle that the average person can get into to get in that wealth arena. So yes, go for it. Go for it. So yes, please check out all of Kevin's information down below. Check out his podcast, his YouTube channel, his social. Please do the same for me. Yeah, I'm gonna sign out here. Kevin, anything else you want to say?
Peace.
All right, have a positive, peaceful, and productive day. Bye.